Hello, and welcome to another day of TA the Degen Way. Well, today I want to hop on and take a look at some of the things that we haven't taken a look at for a while. Some of our biggest movers like CFX, INJ, AGIX, FET. I haven't looked at these for a while. Why? Because they moved so far already. But as you'll see in a few minutes, we've taken some serious pullbacks. Yeah, it's been quite a while since we looked at any of these. Also, let's hop right over to the chart here. I think we're going to take a look at CFX first. Kind of looked at this a little bit yesterday, but didn't make it very far through there. Here I'm on a 12-month chart. The yearly obviously is not going to tell us nothing, so we'll get off that. So you can see this nice consolidation wedge. Well, let's go down to the weekly. There we go. So you can see I've got a few things laid out already. Here we had our nice big 1,000-some-odd% run up. I don't know how much of a retrace that was. I don't remember. Let's just take a look quick. Oh, well, it was a significant one. That's what it was. It was almost 786, but definitely past the golden pocket. So make sure you had log scale turned on there. So our first initial pump up off this bear market bottom, or bear run bottom, brought us up to just above the golden pocket, and was a 2,400%, 2,200%. We'll just say a 20x, 2,000% price rise. And we got our pullback. How far did we pull back? So we want to go just from this swing high to this. Well, that's what I got on here already. We pulled back into the golden pocket of this run up right there. And then we took off, and I kind of expected a possible rejection here and maybe another retrace, but we've put in this nice saucer pattern. So what do I got going on in this CFX chart that's on here already? One, you see the octave scale. If you want to understand the octave method or what the point or purpose of this is, I do have a video on the octave method. I suggest you take a look at it, but in short, what we're looking at is this first range and just doubling it, tripling it, quadrupling it, and out to the fifth run. What do you find? If we pull swing low to swing high, like right here, we have swing low to swing high. Price pulled back to the golden pocket. Now if we expand this by one of these runs, that would bring us to, we pulled back halfway. So now let's take this same distance. rejected. But if we just draw a trend across this money flow, I mean, we could very easily see, you know, this red wave come down here and get clipped off and turn to the upside. When you're looking at the weekly, we're primarily on the downside on these waves. Now let's come down a little bit. Let's go to the 3-day. Sometimes these oscillators, you know, can give you a little bit better picture of what you're looking for than just the price action, because it's the price action smoothed out. It's using averages and just smoothing them out. So look at this money flow trend. You know, is money flow trending to the downside, or is it trending to the upside? Well, I would say it's trending to the upside. I mean, yes, it's coming down here, but I mean, here's the low on the money flow, here's the low on the money flow, you got a higher low. So, I mean, as this comes down, you know, maybe somewhere, I mean, right in here, this money flow would hit this trend, and maybe we see another rip. Whether or not we come down lower than our current price or just trend sideways, that's a completely different question. Which is a hard question to answer. I mean, because we're kind of just sitting at these make it or break it points. I mean, this green money flow wave could come down to the 0 line, and we could just bounce off that. But look at this VWAP on the... that don't look good. Look at this VWAP on the 3-day here. What is this thing doing? It's inverted. We want this. But what do we got instead? We got this. You know, I mean, that's not looking very good there. That looks like it came up and tried to push up. You know, here you got this wick on the 3-day. But instead, you know, we got a nice solid rejection. You know, so I mean, I see a couple scenarios. We could say that, you know, our current range that we're in is a reaccumulation range. You know, so here's our low here, right down, you know, at the 50% mark. And we're just sitting here chopping along, reaccumulating, and before we run on our way. Option number 2 for bearishness is we pull back farther than this low. You know, I mean, could that happen? I mean, it certainly could. We came back to exactly to the 50% mark. So, I mean, let's say that we were to even just pull back down into the golden pocket. You know, the 382 and the 618 are interchangeable. So we'll just pretend the 382 is the 618. I mean, if we were to come down to even just the middle, that's our last support resistance flip. You know, I mean, so this is a level that you should mark on your chart. You should watch. It's not completely untested, but, you know, it's pretty close to being tested. So, I mean, you know, we could come on down a little bit lower than this. Let's say we come down here and we grab that liquidity under there and push on up. You know, that would be this would be a reaccumulation range where we came down, put in a low, ripped, you know, stabilized, and then maybe we get some more upside. Now, option number 3 is even better. Option number 3 says, okay, well, we came down, we pulled back 50%. We're bullish as can be, and we've put in this nice saucer pattern. And where do we pull back to? We got this big giant wick back up. We got the 3-day, and we came down. We just came straight back up. Let's jump down to the daily. Option number 3 says that you know, this is all the downside that we're getting, and how much downside do we get? I believe it's about 65%. Actually, a long ways, 65%. That's a big drop, man. And if you look at the trend, from trend low, from swing low to swing high, how much of this have we retraced in total? I mean, from here to here, we only retraced half of our push up. That's how far and how fast this pushed up. So that when it comes down, not even, you know, a third of the way, it's lost 65% of its value from its high price. You know, it's a significant drop. If we look at our oscillator on the daily, and here, this is the Fu Manchu. I mean, it's pretty much it's a customized version. But if you want, come on into our free Discord and ask me for a link to it. I'll give it to you. All I've really done is I've smoothed out the money flow just a smidge, but it doesn't make much of a difference. But I've changed the color scheme drastically so it's easier for me to see it. It doesn't do anything else special. But just a combination indicator of wave trend and money flow and RSI. That's it. 3 common indicators that, you know, repackaged into one. So option number 3 is we got this big anchor wave down here. You can see we curled up here, put in our top, and now we got this big anchor wave, and that this is a low, you know. Put in this nice low, pop back up, and then now we're coming down to retest it. I mean, it could hold, you know. Let's see where we're kind of holding above is, I mean, what level was respected? Run number 1 on our octave scale. You know, I mean, came up to just above the 50% mark in between here. Even this wick right here is pretty close. Here we pushed back up, and now, I mean, on this push up, I mean, I gotta say that, you know, we appear to be rejecting. I mean, it just depends now whether or not we catch and continue. But so far, I mean, this is nothing special. Even on the daily, we're starting to get this. And what do we see on the VWAP? This VWAP is telling us how spaced out. This blue wave isn't just one wave. It's actually 2. It's a dark blue wave, and then this whitish, lightish blue wave, which is 2 moving averages, smoothed out, and, you know, by taking into consideration a few factors in the price action between high, low, close, and all these different things, comes up with 2 moving averages. And when they cross, that's when you get the red dot or the green dot. Now, how far they are apart, like notice here how wide this white gap is, or this gap is between the light blue or the grayish color and the dark blue, compared to up here where they cross. You know, they're getting closer together. Here they're gapped, and here they're getting closer. This yellow line that they call VWAP, which is not volume weighted average price, and should have picked a different name. But they call it VWAP. This VWAP, as it gets closer to zero line, what that's showing you is that these 2 averages, this light blue and dark blue wave, are getting closer together. So that, you know how that's tracking. But the way that this VWAP behaves tells you a lot. I mean, look at the curvature of it, and it's not the kind of curvature that we want. You know, here we're coming down, and look at the curvature of this right here. It's curved this way. You know, this one is curved this way. This is curved this way. I mean, what do we have as we're coming up? We're curved to curl over. You know, and that's not a good look. And you can see it right here. We've already got our red dot, and then now we're coming down, and I'm thinking what we're probably going to get is a wave here like this with some divergence and a lower price. That's my thought. We could catch here, or maybe you know, we put in a deeper wave and higher price, and you get some hidden divergence there. And the divergence don't really matter, but you can see on the daily, as you know, this money flow has come back to the zero line. It could catch and continue, but you know, those are the 3 scenarios I see on CFX. Either we expect this level to hold this low, and you know, maybe we accumulate here, and what could we look for to show us that, you know, we got a good solid sign of strength. I mean, you got this trend here. I mean, at least a break of the linear trend. I don't really see any curvature in this price action to even show that this move down is even slowing. You know, I mean, as something builds in speed or losing speed, you know, usually you see some kind of a break in the momentum. You know, you see some curvature in the price action, like even here in this run up, you know. And then, you know, trend sideways, breaks trend, and down it goes. So, I mean, we would want to see a break of this downtrend here. You know, if it can break this trend and retest it and bounce, I mean, especially reclaiming this level right here, this, we'll say this 36-cent level would be extremely bullish. To break above this, pull back and test it and get a bullish bar or a bullish candle, you know, that be looking pretty good. Option number 2, we are in an accumulation range. We come back down towards this low, you know, maybe not break it, and you know, come on down, reaccumulate some more, and continue on. Option number 3 is a lower low, kind of down at this last support resistance flip, right dead smack in the middle of the golden pocket, right in between 50% and the 61.8. Put in some bullish divergence on the oscillator on the daily with a lower wave and a higher low on the wave trend, but a lower low on the price at a price of about 8 cents. You know, so that's what I'm looking at on this. Another thing that we can look at, probably the last thing, is to take that high value and start splitting that up proportionally by percentages. So this high is about 55 cents. So, I mean, half of 55 cents, we'll just get some regular percentages from the calculator. So let's take 55 cents, we'll divide it in half, that's 27.50. It's pretty simple. 27.50 comes out where? Let's snap a line at 27.50. Let's get rid of some of our scribbles here. So we got our 27.50, and what did we pull back up to? You know, I mean, Gann said one of his greatest discoveries was these percentage-based levels, that they would act as future support and resistance. You take the high value of the swing or the low value of the swing, and the low value you'd have to add on to it. You know, so you'd take, so let's say the low value is 10 cents. Well, half of that would be 5 cents, so you'd be looking for resistance or support in the future at 15 cents, or 75% would be 7.50, you know, 0.75, or 7.5 cents, I mean. So you would take 10 and you would go up to 17.50, 17.5, you know. Same thing here. So you have 55 cents, halfway would be 27.50. What would 75%? So let's take 0.55 times 0.75. That would be 41.25. Would be another percent base level. 41. These are areas of interest where you're looking for reactions in the price action. 41.25. There we go. Okay. So maybe if we come up for a, you know, a lower high, maybe that ends up being the level you stop at. So let's take 25%. 0.55 times 0.25, which would be a 75 cent or 75% reduction, brings us down to 13.75. So let's see, 13.75. Pretty much right at these lows. right here. It's pretty much this bottom range. There we go. You know, so maybe, you know, one of the levels we come down to is right here. You know, maybe this is the, our higher low. You know, somewhere in this, 75% of the, or 25% of the high value level. That, or we come down, put in a lower low, grab that liquidity, confirm this support resistance flip. That, or we hold this first run on the octave scale and push on up. What are we looking for eventually when we do push on up? We're taking this range, this price range, swing low to swing high, and we are looking for a 1.5 approximate expansion, you know. And just kind of like that bell curve, that area around the middle value, you only got this window. So, hey, that's all I got on CFX. Check back tomorrow. You know, go ahead and smash that like button, hit subscribe, support the effort that we put in to support you. And I will be taking a look at a bunch of these and coming up with areas where we should be looking in the price action, you know, for some curvature curling into it, some bullish action on the oscillator, some good solid, you know, reversal signals that show that, you know, we pulled back sufficiently. And I mean, 65% is a lot, sure, but we could pop back up, let some of those folks out, and more of this trend could retrace. Even though the prices came down 65% in value, we haven't retraced no 65% of this trend. That's what, you know, the 50% rule, you know, half of it's real, you know, you've deviated that far from the extreme, you know. I mean, if we thought about this right here, you know, there's your swing high, you know, we should be looking at this area right here, because, you know, I got this big accumulation window there. So, but hey, there's a link in the description for the free Discord, just there to help you, and in turn you can be a help to me. And check back, we'll take a look at some more, like INJ, AGIX, FET, Curve Finance. I mean, a lot of them. You know, we could look at Doge, Ethereum. And in this kind of no man's land, you know, you got Bitcoin dominance looking like it's about ready to fall off a cliff. And I'm thinking as soon as Bitcoin can stabilize, some of these altcoins, once Bitcoin is not robbing all the liquidity, you know, would have a much better chance at running. Looking for that dominance contract, but I'm not seeing it. So let's go here. I'll show you what I'm talking about there. You'll see something. You'll see that time and price are square, you know. See the market cap chart. But there we go. And we are on the daily. Let's delete everything. What do we see right off the bat? If we look at our current wave, our current push up here, what do we got going on? And what I mean, that dominance is ready to drop off a cliff. Or square. You know. It's a good sign. It's a good sign. I don't know why I grabbed the highlighter. And, you know, Bitcoin is up at an all-time high. It put in a new high. It's been the star of the show the entire run. And, you know, there's only so much liquidity to go around. But when I say drop off a cliff, I mean, you can see the same thing over here, you know. Push up. Lose momentum. Rise versus run. Gets kind of out of skew. You know, here you're rising faster over less time. You know, that rate starts to slow, and boom. You know, when time and price are square, the trend changes. So, I mean, that's what I'm looking for here, you know. Some kind of a drop in dominance. I mean, not down here, but you know what I'm saying? And alts could rip, but hey, until next time, trade well.